Good morning, Gerard.
Record. Morning, Gerard.
Morning, all.
How are you this morning?
I'm well, thanks.
Good.
Well, yeah. I'm trying to remember what day it is with the long weekend.
No kidding.
I know, tough to start at 7:30 right after Labor Day.
Yeah. Well, Tim, you want to get, and just let me know when you want me to share your slide.
Okay, that sounds good. Quick introduction, I'm Tim Davis with Powers Insurance and Risk Management. I'm the Director of Operations there. Have been in the insurance industry since 2008 in Columbia, Missouri. And then moved over here to St. Louis in 2017 to join the Powers family. And have been here ever since, so getting entrenched in St. Louis now. Our agency specializes in risk management on both the personal lines and the commercial line side. So for personal lines risk management, we focus on the more affluent space for personal lines, those who are in the emerging wealth space and who have more than the standard risks to insure. So we come from a risk management approach there. On commercial line side, we use our risk management approach for all size commercial businesses, small to large. We tend to do really well in that mid-sized business as they're growing from 20 to 150 employees. That's the space where we can bring in sort of our expertise and really help grow before they get to a stage of needing to hire their own in-house risk manager to help manage their operations. So that's quick background on our agency. So today we're really going to just talk a little bit about what it's like to kind of manage your insurance through this COVID crisis and through a crisis in general. I figured I'd start talking with the impact on both personal lines and commercial lines. Overall, for most clients, for the end user or purchaser for insurance, the pandemic has overall been positive, especially on the personal line space. Many people have seen rebates issued from their personal lines carriers of 15 to 20%, whether that was for a couple of months or some carriers did that on a full year of premium. Many people right now are taking advantage of telematics in insurance. I'm not sure if you guys are familiar with that at all, but
No, I'm not. Never heard of it.
Nor
so
I.
for personal lines, one of the options is when you're getting a quote for insurance, you can allow them to, when you buy coverage with, say, SafeGo, you can install a telematics device on your car, or it's an app on your phone with some carriers, and they'll actually review your driving history and habits over the next 30 to 60 or 90 days, depending on the carrier. Based on your actual driving performance and habits, you will get a discount from that carrier of anywhere from, it ranges from 5% up to as much as 30% of your annual premium. Right now is probably the best time ever that you could install telematics and use that to your advantage if you're shopping for personal lines. Because I don't know about you guys, but I've gone from driving around 15,000 miles a year to 2,000 miles a year on my car. And I'm no longer driving at peak rush hour time. I'm driving at 8:30 or 9 o'clock in the morning and at 3 o'clock in the afternoon. So all of those things that would have made me a more risky driver in the past now makes me a much more appealing driver today. So if I'm willing to switch insurance carriers today on personal lines and use telematics for 30 to 60 days, a lot of our customers are seeing 20, 30% savings off of what they would have seen this time a year ago. So that's a great strategy you can use to help save some money personally. On the business side, do you guys have any questions on that? I don't want to go too quickly.
I kind of have a question, Tim. If somebody installs something on my car, I kind of feel like, ooh, big brother. So can you talk a little bit more about that?
Yeah, and it depends on the insurance company. Every company has a little different things. Some of them are a device that you plug into the car. It comes with instructions. and then you would take it out after 90 days. It's like a little plug-in piece that goes down under your front wheel or inside under your steering wheel. It's not difficult to do, but it does require a little bit of effort. You have to follow a YouTube video to get it. A lot of other carriers have an app that you just download on your phone, and then it just follows you. So you would pull up the app and identify whether you were the driver or a passenger during that time period that it detects that you were in a car driving. And so that's the one that I think is usually easier. Travelers is one of the carriers that has that device. Nationwide is pretty good with that. I believe Safeco, I can't remember whether Safeco is using a telematics device currently or whether they've switched to an app. I know they're working on switching one of those two ways.
And I think Flow has something.
Yes, for sure. Progressive.
Tim, and others, now that you've explained what telematics is, we actually, my wife used that. We elected her as the most safe driver and only does about 2,000 miles a year. So we used Safeco. It was the little black thing that you stuck into the port underneath, kind of where your left foot is, underneath the driver's wheel. No one's going to get 30%. If my wife couldn't get 30%, nobody's going to get 30%.
Safeco,
actually,
I think only, I think the highest I've seen is 26% with Safeco.
Is that right? They probably didn't drive. They never left their driveway. But my wife did get bumped a couple of times for excessive braking. And it is kind of neat, but it is Big Brother. There's no doubt about it, Lisa. And
for sure.
And we're already, if you got a newer car, they already know what your driving habits are. I've got a Hyundai, and trust me, they've already got the telemetry and everything else going to their, cloud storage someplace. So
sure. Yeah.
Anyway.
Pretty incredible, isn't it?
Yes, it is.
Good to hear that you already used that strategy though, and I assume got some decent savings out of it.
Yeah, she got about 22%.
Okay.
So yeah, it was significant,
Yeah, that's really nice.
Tim, I have one other question. I used to work with somebody who shopped insurance, I think pretty much every year. Do you have a recommendation or, don't do that with regard to shopping?
I would say don't do that in general. I think it's different for business versus personal as well on how often you would want to shop your coverage. On personal lines, I recommend looking at every 3 to 5 years. Part of the reason for that is just because if you do have an insurance claim with the company that you're with, you're more likely to get canceled or non-renewed if that happens on the first year that you're with them. So if I pay $3,000 in insurance premium to Safeco for the first time, and then I have a $10,000 claim because I rear-ended somebody, they're going to immediately look at that and say, that's a bad business risk. I don't want to be insuring them any longer. Versus if you had been with them for 3 or 4 years, they would say, well, I know that Lisa is a good driver. She hasn't had any accidents except for this one. We'll get our money back here as long as she's a good driver going forward. So that helps, I think, a little bit. Overall, it's not a terrible strategy on personal lines to shop your insurance and move that around. On commercial lines, I think it's more important to stick with a 3-year review plan. That's what we recommend almost always with our clients. To stick with a carrier for 3 years, number one, you're able to get that consistency. You're able to build an experience. And if you have claims, which in the commercial space, you're most likely to have some claims, whether it's on the workers' compensation side or on your coverage lines. So building that experience with the carrier is important. A lot of the carriers that we try and work with in our mid-sized space for businesses 20 to 100 employees are 3-year programs, guaranteed rate programs for 3 years for your general liability coverage. That way you know what your expense is, you can bake it in for the next 3 years, and it secures that you're committed with that company for 3 years too. So you're usually able to leverage that for some savings on the front end as well.
That makes total sense. Thank you.
Sure.
Now I'll let you go.
So Mary, Gerard, do you guys want me to talk a little bit more about the business side of insurance?
Absolutely. I'm in commercial real estate. So,
Okay.
and also we got a brokerage business. So anything that's pertinent to errors and omissions, to work comp, to building liability, property, all that. Yeah, you can cover the
Okay.
waterfront for me.
I'll hit some of that. How about you, Mary?
Yeah, that'd be great. I work, my clients are all small, medium-sized businesses, and I generally work with owners. So just having the information and knowing where to point them is something that I like to be able to do.
Okay, perfect. Well, let's start with workers' compensation then, especially while we're focusing here through COVID. Workers' compensation is probably the most impacted line during the COVID crisis, directly at least. Obviously, employees who get COVID could be covered under workers' compensation. That is varying from state to state on the way that they're going to handle those claims. Missouri and Illinois seem to be both very confident in treating them under the workers' compensation provisions. So if an employee has COVID, most likely they can file a work comp claim to help with some of that. And workers' compensation for an injured employee will pay for 2/3 of their wages for time that they're out, and pay for 100% of their medical expenses. So important to know and important to be able to utilize if you need to. I would say that avoiding filing claims for COVID would be a good strategy as a business owner if you can. In many cases, there's not much of an expense related to COVID, and if you can avoid having them go on the work comp policy for a claim, that can add up pretty quickly on your loss experience. George, you can.
How do
If
you, in a
the
remote-
law, how do you avoid it?
Okay.
Sorry, Gerard.
Well, so you have a conversation with the employee. If you're able to allow them to work from home and allow them to continue to work, I would say it depends on how bad the employee is infected. Obviously, if they're going to the hospital, that's a claim. You need somebody stepping in and helping right away. But if it's one of the cases that we're seeing commonly where somebody has COVID, they're sick, but they're at home, your options as a business owner really would be to not pay them and put them on workers' compensation for the 2 weeks while they're on quarantine, which then work comp would pay for 2/3 of their wages. Or you as a business owner could try and find an alternate way to allow them to continue to work and receive income without having to go through a work comp claim.
Tim, okay, we're in a remote work environment. Now, how does someone claim that they got COVID from their work when they're working at home? Or, they contracted it over the weekend at a big party and then come in and say, I got COVID on Monday at work. I mean, that's
a great
kinda
question.
tough to-
So in a remote work environment, most likely that would be a denied claim, just because it would be very difficult to actually pinpoint that COVID came from a work-related exposure. We're seeing claims are commonly accepted for anybody that's a frontline worker. Restaurant industry, those claims are very commonly being covered without question. But if they're work from home employees, or even if you're in an environment that is very difficult to prove that it occurred from your work-related activities, most likely it would be denied in that case. So it still can be a messy front on the work comp space. For a business owner, though, workers' compensation right now is another key thing to focus on, because the premium that you pay for workers' compensation is based exclusively on the payroll that your company runs every year. So most businesses we've seen have had a significant payroll impact to their company, whether it's one way or the other. So it's certainly a great time for those businesses that are impacted to reach out to their workers' compensation carrier and try and get that carrier to work with them to update what their estimated payroll should be on their current policy. You know, we've had examples of businesses that have gone from, you know, $1.5 million in estimated payroll in a year down to a couple $100,000 of estimated payroll in a year. And so being able to work with the carrier and get that reflected so they're not paying premium on a company that is 10 times the size that they currently are is certainly an important step to take. Perhaps an even better step to take through workers' compensation is pay-as-you-go workers' compensation policies. It's something that we haven't talked about a ton in the industry, especially for many people in stable spaces like the office space industry, commercial real estate. So I'm certain that we haven't talked about pay-as-you-go workers' compensation much just as an industry. But pay-as-you-go workers' compensation policies with the carrier, same as any other work comp policy, except the difference is that every time you process your company's payroll, you report that payroll to the work comp carrier and pay the premium in real time to that carrier. So the theory is that at the end of the year, when the carrier does an audit, the balance should be $0 because you're paying for the actual workers' compensation premium that your company is using in real time. So for companies that are seeing a large fluctuation in their payroll, that pay-as-you-go model can be very beneficial, especially if there's a chance that that company can go from 200,000 in payroll back to the 1.5 million. It's important for them to be able to pay the premium for the workers' compensation in line with that, so that they don't have a big bill, you know, a year later when they go back to full-scale operations. Does that make sense? Any questions on the pay-as-you-go piece?
Why do you not discuss it with them, with companies?
Well, so historically, it just has not been a key selling point, because if you're in the office space industry, or if your business hasn't fluctuated in payroll dramatically historically, it doesn't make much sense. And it is an added step to the process that you as a business owner have to do. So, you know, I've always been hesitant to ask a business owner to add one more step to their process every 2 weeks when they run payroll. Now, when you're talking about seeing dramatic swings in what your payroll is, or if you're in the construction industry where your rate per $100 of payroll is over $10, seeing those kind of changes are really impactful. So that's when it makes more sense and becomes worth your time as a business owner to start looking at it.
Yeah. Thank you.
Yeah, my pleasure. So another one that I did want to talk about that's a big talking point here in the business industry right now is on business income claims. And Lisa, that's the slide that I have prepared if you want to throw that up there. This has been the hottest topic in the industry right now because this is where most companies have tried to file claims, is for a loss of business income. For instance, so on a general liability policy, most BOP policies, say a restaurant, has a policy that says if you have a loss that happens and your business is out of operations for the next 2 months, then we will pay for that revenue that your business should have had over that course of 2 months. So with COVID and the shutdown that has happened, many businesses have hoped that the business income piece would respond because their business had to shut down or had a dramatic change in income as a result of COVID. When we look at the big picture, and I'll look at this just from the 30,000 foot view here right now, insurance really was not intended or designed to cover pandemics because it's just an exposure you can't fathom or know to look for. Under the current insurance language, claims for loss of business income are only covered if the loss is because of a covered underlying claim. So, if a tornado comes through and hits the building, obviously that's a covered claim. So the business income loss piece will be covered as well. But a pandemic is an excluded claim on most policies. So therefore, there is no way for business income to respond to the loss for a pandemic. This is being challenged in the courts right now, multiple court cases across almost every country or every state in the country. Missouri and Illinois both have active court cases in the system. I expect this to go all the way up to the Supreme Court with many cases. This will be a multiple year battle, and we're talking about potentially billions of dollars of premium that would be at stake here based on these court decisions. So this is going to be a very long process to kind of sort through and come out of it. What I would expect to happen is I expect all those claims to be denied and insurance to not respond for business income on these policies. I think in the future, you'll see a pandemic insurance or some form of insurance created that you can purchase, which would cover something like this. I don't think it's going to exist now. But with that said, my advice to all clients right now is to file a claim for a loss of business income if you've had to shut down or alter operations because of COVID. Because we have these active court cases going on right now, I would say just file the claim, get the denial letter, and save the letter for later. So if those court cases do ultimately come back and get won, and there is a legal precedent that says that an insurance carrier should have provided payout for business income, then you'd have that documented letter, and then you could go back and take the next steps towards trying to get recovery on that. But my advice right now would be to just file the claim, hope that maybe that comes out and gets lucky for you as a business owner, but to focus on running the business as is without expecting any sort of payout from insurance. So those were some of the key pieces I wanted to talk about on the COVID. Now, I know, Gerard, you wanted to talk a little bit about the professional lines and those pieces.
Yeah, I mean, it was just generally, have you seen any other impact on the COVID? I was interested, obviously, from a real estate owner and manager. We've had some tenants who have not paid or paid less. I'm sure their business has been impacted a lot more than as a landlord has been.
Yeah.
But I could see them filing a claim, but I guess the malls like Galleria locally, I mean, they were shut down for 2 months. I imagine they would be, filing a claim with their insurer. I mean, is that kind of the same thing?
We're definitely seeing a large increase in claims on the professional line side, for sure. EPLI claims have been very, very, they've been in vogue for the past 4 or 5 years anyways. Practices liability claims are wrongful termination, improper hiring or firing practices. So we're seeing definitely a lot of those pieces. HR claims, I think you will see definitely on the rise here as time goes on, over the way that COVID is handled inside the office or outside the office. I think there is a large increase in potential exposure that you as a business owner for the liability surrounding COVID with the office environment. So all these things are still kind of emerging and to be seen. I think the best practices standard that I can give you as business owners is to just continue to be fluid and try to listen to what your employees are telling you for safety and the way to manage their experience when they're working.
Do you see a impact on health insurance coverages and rates based on COVID? I mean, I know that elective surgeries are down, but are they going to start taking, hey, this is the first pandemic, we're going to have a lot more coming forward? Are they going to be throwing that into the rates?
Yeah, I really don't know. Health is not a specialty of mine. I specialize on the P&C side. So unfortunately, I would really just be guessing if I tried to take a stab on that. Yeah, wish I could help you more on that one, Gerard. We use our favorite company to use for benefits is Care of Us Benefits. They're our partner for all the benefit side, which is a decision our company made about 5 years ago. To let them specialize in the benefits, and we'll specialize in the commercial.
I can understand why.
Yeah, it's really important to know what you're doing in that space, and we wanted to focus on knowing what we're doing in this space instead. Let's see here. I think for the most part, I have covered everything that we kind of wanted to. So I know we're coming up on the 8 o'clock time. Any other questions or anything else that you guys wanted to get out while we're here?
I guess just a general question, and that is, where do you see the P&C rates going next year? Or is it, I mean, obviously it's a bizarre year when it comes to those.
Yeah, it is. I will tell you for sure that the rates in the P&C industry will continue to go up. I think we're starting to enter a pretty hard, aggressive market for rate increases. I think the next really 3 to 5 years, we'll see businesses feel quite a bit of increase. And that's because we're seeing a bunch of different insurance lines right now that are being dramatically impacted. And that's been over the course of the past 3 to 5 years. And COVID certainly not helping that either. But as we've all seen, the storms are getting bigger and stronger and more devastating everywhere across the country. So that impacts the property lines of insurance across the world. Then we have more and more lawsuits for improper hiring and firing practices. So the professional lines are getting impacted pretty dramatically as well. So I would expect, and we've been advising our clients to expect to see rate increases, especially if they're heavy on the property side, or if they're heavy on the professional line side, probably in the 10 to 20% range over the next 3 years, probably each year for the next 3 years. I hope I'm wrong and they're not as dramatic or aggressive as that. I like to shoot high, and then if it's only an 8% increase, you're as bad. But that's kind of what I would think you'll be seeing here over the next few years.
Which is a lot.
Yeah. Yeah, I think it's pretty significant.
Huge. Anybody else have questions for Tim? Tim,
I have to say to Gerard, I have to admire your ability to smile in the face of that information.
Well, what I was smiling about was it said, hey, it sounds like health insurance, 10, 20% every year.
Yeah.
Whether you use it or not, guess what?
What are you going to do? Yeah.
Yeah, too bad there's not health insurance that's pay as you go.
Right?
Actually, there is. It's called none.
Well,
Yeah.
that is true.
Yeah.
And keep your fingers crossed.
Exactly.
Yeah.
Exactly.
This is great information. Thanks so much, Tim.
All right. Thanks, Mary. I appreciate it. Thanks,
And
Gerard.
thanks, Tim, for doing it, especially after a long weekend.
Yeah, my pleasure.
I appreciate it. And I did record everything, so it'll be up on the YouTube channel too. And I'll share the link with everyone.
Appreciate it.
Wonderful. Thanks for having me.
Thank
Thanks,
you.
everybody. Have a great Tuesday.
See you
Bye.
soon.
Bye.
Bye-bye.